Namaste, friends. Welcome to our weekly series where we bring you the latest updates in taxation and corporate laws in a simple and engaging manner. In this video, we will discuss significant legal pronouncements and updates for the week ending 8th February 2025. So, stay with us till the end as we simplify these complex legal matters for you. Let's begin with an important ruling under the Income Tax Act. In the case of Arun Agrawal vs ITO, the Jodhpur Tribunal ruled in favor of the taxpayer, who had sold agricultural land and reinvested in another agricultural property while claiming an exemption under Section 54B. The assessing officer denied the exemption, stating that only a portion of the land generated agricultural income during the relevant year. However, the tribunal held that since the land was an integrated asset, the exemption under Section 54B could not be denied for a part of it. This ruling brings significant relief to taxpayers reinvesting in agricultural land. Moving on, in the case of Meena Jewellers Extension, P. Limited vs CIT, the Hyderabad Tribunal ruled that before making a best judgment assessment under Section 144, the assessing officer must first reject the books of accounts with valid reasons. The tribunal emphasized that unless the books are properly rejected, profit estimation cannot be justified, reinforcing the principle that assessments should be based on valid reasoning rather than arbitrary estimates. Another significant ruling comes from the case of DCTVS Allsec Technologies Limited, where the Chennai Tribunal held that connectivity charges paid by an Indian company to US-based service providers for co-location and data connectivity services should be taxed as royalty under Indian tax laws. This ruling has major implications for IT and telecom businesses that rely on overseas connectivity services, as such payments may now attract taxation in India. In another case, Lal Chand Verma through his Legal Air vs Union of India, the Delhi High Court quashed a tax notice issued to a deceased taxpayer. The Legal Air had submitted a death certificate as evidence, but the tax department failed to issue a fresh notice under Section 159(2)(b) to the Legal Air. The court ruled that all proceedings based on the original notice were invalid. This case highlights the importance of correctly following legal procedures when dealing with the taxation of deceased individuals. In another crucial ruling, S. Balaji Megtech Private Limited vs ITO, the Delhi Tribunal ruled that cash sales already declared in the books of accounts cannot be treated as unexplained cash credits under Section 68. The tribunal noted that since these transactions were already recorded in the books and had been accepted by lower authorities, there was no justification for adding them again as unexplained income. This is a crucial decision for businesses dealing in cash transactions, ensuring that legitimate cash sales are not subject to unnecessary tax scrutiny. Switching to GST law, the Bombay High Court provided relief to taxpayers by ruling that an appeal should not be dismissed merely due to a delay in pre-deposit payments. The appellate authority was directed to consider and dispose of the appeal on its merits, recognizing that minor procedural errors should not deprive businesses of their right to appeal. This ruling reinforces the principle that tax procedures should be applied fairly without unnecessary hurdles for taxpayers. Lastly, in the case of Rachakonda Srinivas Rao vs Initiating Officer, the Delhi Tribunal ruled that a property cannot be deemed Benami merely because it was provisionally attached by the authorities. The court noted that since the property was neither transferred nor held by an alleged Benamidar, the applicability of Section 2(9)(a) of the Benami Transactions Act was doubtful. Consequently, the tribunal held that neither the property nor the transaction in question could be considered Benami. This decision is particularly significant for property owners facing legal scrutiny under Benami provisions. That concludes our weekly update on tax and corporate laws. We hope this information helps you stay informed and compliant. If you found this video helpful, don't forget to like, share, and subscribe to our channel for more updates. We'll be back next week with more insights. Until then, stay compliant and stay ahead.